Well, Wall Street rallying across the board today after a roller coaster of a ride last week. Remember that? And now earnings season is heating up. Should investors brace for another turbulent week ahead? We're covering your assets tonight with Alan Haft, a financial planner and author of the book You Can Never Be Too Rich, and David Scranton, the CEO of the Scranton Financial Group and Advisors Academy. Welcome to you both. Alan, I'll start with you. You know, we talk about volatility, but we've got 20 companies reporting, 20 big companies reporting this week. We just had Apple report. Which of those are going to move the market the most in your view?
You know, I mean, Apple just reported and they crushed it, Jerry. I think, you know, you have Amazon coming up, Ford, a couple of, Procter & Gamble on Friday. I think generally speaking, most companies are reporting solid earnings, and I don't expect any big surprises out there.
So we got Boeing, AT&T, Microsoft, Amazon, Ford, UPS, P&G, big companies reporting. David, to you, what are you expecting out of this? Because consensus third quarter earnings growth is up 6.9% from a year ago. That's the expectation from Wall Street and analysts. Do you agree?
Well, we'll find out by Friday. But if it's true, and this is a good quarterly earnings season, then it could very well be that the markets calm down a bit and we don't get a repeat of what we saw last week. If we get some surprises on the downside, then we can see a lot more of last week all over again and possibly even exacerbated.
So, Alan, one of my big concerns, because last week we were talking about global slowdown. That was the headlines. That was what was sending stocks into disarray, Ebola as well. But what is going to be the nexus of concern now for the markets? What are they going to be worried about, the traders?
You know, I think the ongoing Ebola issue being a black swan event, I think that's going to really take precedent. I mean, over this past weekend, there were no new cases reported, so I think that's what restored some calmness to the markets this week. But on an ongoing basis, you still have the lingering threat of ISIS and some of and the China slowdown with the housing bubble out there and the European market slowing down. But I've been saying this for about 2 years, Jerry. I really think that the resilience of the markets has been tested over the last year with things like Russia, with the Israeli, with the flare-up in the Mideast, that until the Fed starts to raise their rates, I think there's nowhere else to go in the market, in the world, to make money except for the stock market. So for that reason alone, I think traders and the public in general, there's nowhere else to go. So the market's
Alan, you're a bull right now. David, I don't think you're as optimistic. Tell me about your thesis right now. What do you see happening in the markets, David? And what is the underlying sentiment that's going to push?
Well, you've seen the volatility increase since September. First, there were 200-point swings, then 300-point swings, and then midday on Wednesday, we saw a 400-plus point swing. And that's because I believe that people are concerned about what happens after quantitative easing finally ends. In this great cyclical bull market we've had over the last 5.5 years, every time we've had a quantitative easing of sorts, the market went up, and every time quantitative easing ended, the market came down. So with the bull market already having lasted 5.5 years, large investors are nervous and they have one finger on the trigger, and that's why the VIX is at a record high. And that's why you're seeing what you've seen in the last month and a half. All right,
Alan, jump in here. One finger on the trigger. People are going to sell. Why isn't that true? I know you don't agree with that.
I'm sorry, Jerry. People, the people are going to be selling. Is that what the?
Well, so David says that the professionals have one finger on the trigger because we've had so much volatility, slower, broader economic growth in other parts of the country, lots of worries out there. What gives you hope? What makes you feel like this is, the market can only go up?
Really, because the U.S. economy generally is still robust. I mean, yes, there's been a little bit of slowdown and there's some headwinds around, but again, I'm going to go back to what I said before. There's just nowhere else to make money right now.
Alan, how is it robust? I mean, robust is such an aggressive word. I'm thinking 4%, 5% growth, but that's not what we have.
I should rephrase that. It's compared to the rest of the world. So
well,
because
that
of that,
true.
yeah. So compared to the rest of the world, there's just nowhere else to really be putting money right now than the U.S. market. So I'm not a big believer. I should, I'm not a big believer.
I want to just get one more thought
sectors
in here before we go. And David, I'll turn to you. Oil prices down dramatically, and I mean dramatically. What's that going to do? Is that going to make consumers spend more? We keep waiting to hear that consumers are excited and they're spending. What do you say?
Well, that could certainly help the markets if they do spend. Unfortunately, what's happened with a lot of the extra cash over the last 5.5 years is a lot of people have used it to pay off debt, to invest and not spend. But in theory, it does put extra cash in their pockets, which is a good thing for the average American.
And from your lips to God's ear, maybe they will spend and the economy will grow robustly, Alan. Alan and David, thanks for coming on tonight. Great to see you.
Thanks for having me.
Thank you.